Hello from Trend Signal for a review of the data, events and news this week, starting the 20th of November. The main news on Monday morning is the failure of Angela Merkel to agree on a coalition to govern Germany. The headline's pretty clear, certainly from the Financial Times. Coalition talks collapse, certainly BBC. FDB pulls out of coalition talks, and Bloomberg's it's the headline across the board, really, which is curious when you look at what the markets are doing. Having swooned a little bit, the DAX and the Euro on the opening on Monday morning, they've recovered to trade close to the unchanged levels from Friday evening. The main reason for the failure of the talks is that the FDP pulled out of talks on Sunday evening after 4 weeks of negotiations with Mrs. Merkel's CDU-CSU bloc, and the other party being the Greens. Social Democrats, who had been part of the sort of grand coalition, got pounded in the elections in September, and they vowed to remain in opposition rather than join another coalition with the CDU-CSU bloc. So for the markets, well, we've already discussed it, the reaction was quite negative for the Euro and the DAX, but that seems to have been reversed, at least early on in the session on Monday morning. The options for Merkel, well, she's going to meet with the president of Germany, who has the power to call a snap election. There are 3 possible outcomes. Well, firstly, the snap election, that won't be good for the Euro or the DAX. Merkel then decides perhaps to set up a minority coalition with the Greens and her CDU-CSU bloc, which would not be good for the markets again, really. And the third option really is to try and get the Social Democrats to agree to join the coalition, something that they vowed not to do. Should that happen, I think, well, option 3 would be ideal, I guess, but maybe the markets think that this is the most likely outcome, judging by the reaction on Monday morning. As far as the markets are concerned this week, it's Thanksgiving week. You'd have had to have had your head in the sand or been on another planet not to know it, with all the Black Friday adverts, although quite a few people in the UK know about Black Friday. They didn't know it was anything to do with Thanksgiving. Anyway, it's a secular holiday in the US, more important, some might say, than Christmas even. Markets tend to do well in Thanksgiving week, up an average of 0.6% over the last 20 years. The markets do not close early on Wednesday, as some people think. They have a full day's trading, but they're closed. All markets in the US are closed Thursday. Of course, all the rest of the markets in Europe and the Far East are open, as you'd expect, but volatility, volumes, liquidity will be a bit subdued, I guess. On Friday, the equity indices, index futures, I should say, they close early, along with the stock market. The New York Stock Exchange closes early at 6 o'clock. That's 1 o'clock Eastern Seaboard time. So an early close on Friday, plus with a few commodity markets that were also shut. So expect a fairly quiet day Friday on the markets, especially as quite a few people in the US take Friday off as well for a long weekend, and for that dreaded Black Friday event that has infected retailers and consumers here in the UK as well. Last week, markets had a little bit of a downer, certainly the FTSE, DAX, and Nikkei all lower on the week. Of course, last Sunday night's news re Merkel may have more of a lasting effect on the European markets, especially the DAX and the Euro stocks, depending on what happens with her options and what comes out of our meeting with the president of Germany. Trump's tax plans still struggle to get the more conservative Republican lawmakers on his side. Market seems to expect a deal, but it looks less likely before Christmas now, but things can change, obviously. I guess the news regarding Merkel will likely counteract any negative news out of the US, so the euro may not make the sort of headway it made last week, having tacked on 1.25 cents against the dollar. The yen doing very well last week, touching the best level since mid-October. Although the Nikkei, although down 1.5%, held up particularly well, bearing in mind that the Japanese yen was that strong. Sterling continues to defy the doomsayers, despite the lack of progress on Brexit. ministers resigning a week or at least under pressure, Chancellor. Sterling seems to have held up well and is currently close to the sort of upper end of its current range that's been in place since early October. Let's have a look at the data and events this week. There's not a lot to talk about, really. Draghi speech, I'm not altogether sure why. They've got two speeches here on Forex Factory, but Mario Draghi talking at the European Parliament Economic and Monetary Affairs Committee in Brussels. Both of them 2 hours apart. Not sure why. One just carried on talking for 2 hours, maybe. Anyway, that's Monday. Tuesday, we got the minutes from the Reserve Bank of Australia previous meeting. Won't actually herald too much. Interesting. The inflation report hearings. This is Carney and 2 members of the MPC at the Houses of Parliament for a grilling. It'll be interesting to see what comes out of that 10 o'clock on Tuesday morning. Yellen is then speaking later on in the late evening, our time. That won't have any effect on any of the markets because they're all shut. And then the main event for the week is the, we call it the UK budget, the autumn forecast statement, is its proper name, I understand. Expect news regarding housing, new home targets, talked about potential relief for first-time buyers on SDL, the stamp duty, nurses' pay, takeaway packaging, hardly noteworthy, but the Chancellor has a little wriggle room now, according to the OBR, or at least the analysis from the OBR numbers. Durable goods in the US is always an important number. It excludes some of the big ticket items like aircraft, etc., but a positive number there will buoy the market, I guess. Crude oil inventories, the regular weekly stats that have mostly been in drawdown mode over the last 6 to 7 weeks. We have the minutes from the meeting of the Federal Reserve, the Federal Open Market Committee meeting, I should say, early on in the month. Won't really expect any fireworks from that. It was fairly clear that there were no decision on interest rates was going to be taken. That's the excitement to come in December. We then jump to Thursday for the second reading here in the UK of our third quarter GDP data. Only 40% of the data is collected when they release the prelim number, which surprised the markets a little bit. Came out at plus 0.4% when we're expecting plus 0.3%. That helped the MPC in their decisions about raising rates last month. And then, of course, we've got Thanksgiving, which basically means everything will be very quiet on Thursday. And that's it pretty much for the week, actually. Thanks very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.